metalheads. This is Brad with your No Bull Precious Metals Report. Today is July 8th, 2021, and we have a big day in store for you today. So let's just get started. The first thing I want to bring up, again, the FinViz board, as we begin every one of these discussions. We can see today is pretty red. It's very ugly, especially the equities. We're just starting to get rolling with the day, but there wasn't a lot of good overnight news, so that kind of drew everything down. So we're definitely seeing that with the Dow, the S&P, the Nasdaq, the Russell, and the Nikkei. But even that, we're spreading into some of the other things. Energy, if you remember, yesterday was pretty decently red. Some of that has kind of recovered. We're still, hovering the negative 0.5% range on crude, and even like gas, we're seeing, it's a plus 0.01%, but it's not, it's nothing crazy at this point. It should be black for for everything that it is. As we go into, grains for the beginning part of this week, that was the other highlight. That was pretty bright red. We were seeing significant drops in those contracts. However, this week or today, we're not necessarily seeing that. Those have kind of recovered, but to our direct focus is metals. And we're seeing, as these early returns come in for the beginning part of the trading day, gold is still kind of hanging in there. It's up 0.57% day over day. Silver is 0.23% day over day, according to this, which it doesn't account for actual spikes or anything like that, but it's 26.19 right now. Platinum is down by over 1%. Copper is down by almost 1.5% at 426 per pound. And palladium is also down almost 2% at 27.95. So there is kind of a mixed bag going on in metals. But let's talk about what's going on here and get to the dashboard. So the first thing up is today on the weekly reports, we have our actual weekly dissemination of the jobless claims. So we have the initial jobless claims, and then we have the continuing jobless claims. And the initial jobless claims are first-time filers for unemployment at the state level. So the previous was at 371,000. They were forecasting 350,000 as a median forecast, and we actually wound up with 373,000. So we had an increase of 2,000 new filers. Well, 2,000 additional new filers as we moved in from the previous week. Continuing wise, we had the previous week was 3.48 million. We're still on unemployment. And we had 3.34 that actually got reported for this current week. And that's always a week behind. So those aren't real healthy numbers. We had an increase in the amount of unemployment. That's not a really great sign for a recovering economy. So that all kind of factors in. But as we start moving down, we're going to go with this crazy 10-year Treasury rate number that if you actually start doing some searches, other people are starting to notice this as well. This whole conundrum, or this difference between where the rates are and where they should be, because given the current circumstances, we shouldn't be seeing a decline of this nature within the 10-year Treasury rate. We're currently sitting as of today at 1.29, and we have that 3 basis point spread from 1.27 on the low and 1.3 on the high. But again, trading day has just begun. If we back it up to yesterday, when I gave the report, it was at 1.31. Currently, we're at 1.32. So that was yesterday's close. Where it's actually going to end up now is really anyone's guess. I mean, it's on that downward trend that's pretty obvious to see from, July 1st all the way down. And even largely we can see it from pretty much back to June 3rd. We've been on this descending trend for the interest rates. But given the Fed announcements that happened, with rising interest rates that they're expecting, as well as the inflationary pressures, we're seeing this whole chart isn't making a lot of sense. But again, I'm not a bond trader. I don't pretend to be. In fact, during my finance classes, that was probably the worst subject that I had. But it is what it is, and we're just going to watch it and see what happens from there. And I will leave it to other commentators who could talk much more intelligently about the movements of treasuries. So I do want to bring up the Fed reports, and this is an actual visualization that I do. This top graph, it's a visualization of the unemployment that I actually throw on. I don't show it too often because it's really only updated once a week. But we can kind of see, the numbers are pretty flat on this bottom portion. I'm going to get rid of these so that we can kind of see with a more zoomed in feel of what's going on. But we can see how the unemployment is actually tracking from this point on April 3rd of 742,000 initial claims. We did have this descending action to June 5th at 374. But then it rose again, dropped again, and now it's on this upward incline. So when we start looking at that, that's not a good signal. It's just not sending good vibes. And then of course we add in the continuing claims. We can see where they're still declining. I'll pull off the initials so that we can kind of see where all this still kind of rolls. Same thing really, except this goes back to March 6th. We can see where the steady decline started. We went from 4.12 down to 3.84. And we continued on with that trend pretty well until early May, when we had that bump, went back down, had another bump, and that started declining again. But we're still on kind of a declining period. I mean, overall we are declining, but it's just not as fast as what really anyone would really like. So that's kind of the challenges that we're facing right now, and that's going to be something that's going to kind of hang over the day. And I'm sure that you're going to be inundated with stories about this on the news and everything else. However, let's go to the markets themselves. So beginning with silver, we can see that silver's just, it's just kind of lazing around at the bottom side of the VWAP over the 5-day. We're hovering in that, that -2, -1 zone. And right now, as it sits, I mean, this is actually a few minutes outdated, so it's 26.16 is the current price according to the live stream. But with this right here at 26.23, I mean, that's still not that horrible in terms of the price from where it was, because we were dipping into the high 25s, a week and a half ago. But if we start looking at what was the previous VWAP, where should it be? We're kind of riding right in that range. We look at the intraday, and we're pretty much right within the range of those two gaps between where those volumes are. So, I mean, where the price is going to go, I would expect to see, and this is just my wild ass guess at this point. I would expect to see a continued consolidation between these two, with a possible breakout to the upside. That's just my guess. I would say that the actual natural price is going to probably run into, where that VWAP is at the 26.30 mark. We might see 26.30, we might see 26.40, so somewhere in that neighborhood. That's kind of where it looks like it almost wants to consolidate into. But we'll see where that goes. Gold, however, is a pretty good story for us today. And the interesting thing, I had a comment on one of my posts about this, that someone disagreed about the movements of gold. And yeah, I think that's interesting. And I think that serves as an interesting lesson, because for as much data as I can throw out there, I don't know everything. I don't claim to know everything whatsoever. And it's important to realize that most people, if you line up, say 10 people in a room, show them the same chart, they're all going to get different reactions, different interpretations out of it. And that's one of the challenges of just reading charts, is that if you start looking at just price action, everyone can see different things. I can draw lines all over this chart that would show, that would support one position over the other, whether it's going up, whether it's going down, whether it's just going to stay where it's at, anything like that. However, it's when you start adding in other factors, which is why I spend the time, in the first thing in these video casts, doing going over the FinViz board, going over the reports, all of the drivers that go into making the decisions, or what's going to influence someone's long-term and short-term range goals. And not just for the person who has an ounce or two or 10 ounces, but the guys who are actually trading in 100-ounce contracts, who are moving significant volume and things like that. But it's just interesting. So again, as you watch this, take from it what you will. Don't let me taint your view on what's going on. As you'll notice, it's very rare that I make direct predictions on this stuff, because I'm just looking at the data and just trying to figure it out, and hopefully providing you guys insight into how to also look at the data and make your own decisions. But as I look at today's data, again, the five-day view, with the 5-day view app applied on the gold price, we can see a couple of interesting things that have occurred. We can see that from the 6th, we had this bottoming out right around that 1792, which was right about at that, almost at the -2 standard dev from that. But from there, we had that ascending motion, and then it just kind of hovered. We kind of had that flat line for a bit. We had the decline that occurred yesterday at 2100, which was 9 o'clock Eastern time. That declined down, which of course that's that's European time range. That's Asian time range. That's when the overseas markets are trading, and it's not unexpected. It's not something that we don't necessarily see, that all of a sudden the foreign markets start to push it down, especially in gold. There are some reports out today that are talking about the decrease in demand from China on gold. So I haven't had a chance to really dig into that yet to make any type of assumptions or analysis on it, but that could be factoring in, especially with the overseas markets. But from there, as soon as we got to really, 310 in the morning, everything started picking up again, and we caught that resistance right at the +2 deviation. It dropped back down, and that punched through. And now we're just kind of riding that. And we're starting to see that as we're collecting it, we can see that there's also a volume increase, because we can see the overall shift that's going on, especially at the later ends of a 5-day VWAP. We can see that there's volume action that's actually driving the price increase, because that line is also starting to move up. If the volume wasn't supporting it, if it was just a few guys, doing some buys and playing with the price, we wouldn't see the VWAP move. But because we're seeing that move, we can also say that there's volume that's actually behind it. So if we look at the previous day VWAP, you can see that we're well above. We're quite a bit above where that is, and realistically probably around the same place, around a +2 dev. I don't throw those on this graph just because that would get way confusing for everyone, including myself. So when we look at the intraday, we're still riding high, and we're probably about a +1 above. So we're definitely on strength on three different volume weighted averages, all the way moving through. So that's actually a pretty good harbinger for gold. But I don't want to spend all my day talking about gold. So let's get down. We can look at the price performance, and I won't I won't belabor this too hard. But if we look at silver, silver is riding well below the 1% mark. It's at negative 1.43. If we add gold in, gold is doing well. Gold is at plus 1.59, so 1.6. So, I mean, there is a definite differentiation between these two right now. And that's driving a lot of what we're going to see here, which is the gold silver ratio. We're seeing, that market to market gold silver ratio starting to poke that 70, which is always, that's kind of one of those technical symbols that, area of resistance, area of threat, sets off warning bells, that type of thing. We're even seeing that on retail to retail pricing with, we're above the 60, which is never a place that I like to see it. To me, it always feels that there's significant imbalance that's occurring, even if we haven't poked above spot to spot, above that 70 mark. So let's do a quick overview of the retail market. We can see where things are going. We can see on our benchmarks for silver, from the 1 ounce generic, the Philharmonic, the Maple Leaf, and the Eagle, we can see that there's definite week over week price increases. Prices are going up. We have seen that reflected within the spot price, even if it doesn't feel like it. If we go back to these weeks of spot price, we can definitely see that the underlying price has gone up over this time since that decline. Because if you remember, a couple weeks ago, we just had a couple of weeks of decline where the prices were going down. However, and this is really where these two charts really come into play, is that we can see these lines that are in the incline. We can see the week over week. However, the drama of it really shows up within the average price for just looking at the 5-day. Although the price is creeping up, we can see that it's roughly flat. I mean, it's not perfectly flat, but there's nothing that's really really incredible about it. There's nothing that sets my heart on fire. Going, yes, I'm going to make a fortune on my generic 1 ounce rounds, or even my Maple Leafs, or my Eagles. Things like that. We can see that these are all roughly running pretty boring. That they look like racing stripes. But as we start looking, and I just wanted to point this out before I move on. So put a pin in the last little discussion. If we look at the comparative market, from the day over day, if we look at that since what market opened on the 6th, as we start looking at that, we can see that there was an interesting movement in the average price of the maple throughout that point. So someone ran a pretty good sale, and it kind of affected the price and didn't move things for a while, and then all of a sudden they recovered on it. So these are the things that you should be looking for if you're buying. Do a survey of the major distributors, and see before you click that add to cart or buy it now or whatever it is. Take a look around, because chances are you're going to be finding something, and it's just you can save some money, and especially when we're talking about items that are $35. If you can save 1%, if you can save 3%, whatever it happens to be, it's going to add to your pricing. But I just want to go back. Again, we have this racing stripe on the average retail. As we go to gold, however, we can see kind of a similar function. We can see the price is increasing. It's not as dramatic because, again, we're talking about the differences of, say, $20 or $10 or whatever it happens to be on realistically a $2,000 item. So you're not necessarily seeing the same dramatic shift as you would as like a 30 cent on, a $30 item, at least in comparison. However, where we do see it is when we start looking at the average price chart over the week. This is not a racing stripe. There's a definite incline here that is much more similar to that's not similar to what we were seeing previously with like the generic silver or anything like that. So that's part of what's really going through this with, and we can see it with the Philharmonic, the Gold Eagle, and I have a data issue on that one. See, I'm not perfect. The Kangaroo. Let's see. The Maple Leaf. And we can see that all the way through. We can see that there is a general increase in the average price. We can see it as an increase in the top price as well as the low price on most of them. So as we go through that, just something to keep in mind. Gold and silver are starting to move differently within their pricing, especially within with the way that they're pricing themselves, in addition to or in divergence with their spot prices. As their spot prices move in different ways, they're moving in different ways. So we're definitely getting that distinction between the two items at this point. Whether that's a long-term trend or not, a couple days worth of data is not a long-term trend. A couple of months worth of data is not a long-term trend. What I normally am looking for is, is this what we're going to be seeing through the rest of summer? Is this what we're going to be seeing for the rest of July, maybe? So it's really hard to say, but it's important to just keep tabs on what's going on, seeing what the general trend is in pricing, and understand and react. And I know that there are some of the guys that listen to this that are sellers. So it's important to kind of look at this so that you can kind of maximize what it is that you're doing within your own inventory and looking at what consumer expectations are. Generally, the big distributors aren't going to translate directly into small scale sales, but it is something that you can take some lessons from it. But with that, I am going to wrap up for today, and I'm just going to say once again, if you like what I'm doing, please like, share, and subscribe. It helps feed the algorithm. And I will be back tomorrow with the weekend wrap up. So until next time, happy stacking.